Nice, 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 nice. Wow, wow, wow. Sorry about that, bro. Sorry about that. Your battery is 3%. Wow, that's bad. That is bad. But wow, that's bad. But I think it's already been recorded just in case you probably your phone turns off. The record will be available on the group chat. So first of all, let me introduce myself. First of all, I'm Joshua by name, and I've been in the forex market for about like close to 3 years now. I started back in 2019. Met a few mentors, started with a South African guy, taught me a lot about indicators and all that. And I think a few months later, that was around December 2019 or so, I met with Mr. Prince, who actually, whom I learned a lot of this price action from. And from there, I went further to purchase other courses and also learn more myself from various people. Okay, let me admit these people now. They are joining us now. So I went further to, acquire more knowledge from other, mentors and various, free training courses online as well. I utilized Baby Pips. If none of you actually know Baby Pips, I think that is a great place for you to actually, acquire more knowledge about this forex market. Probably if you are not yet consistently profitable, Baby Pips will help you a lot. So basically, we are going to be looking about at four concepts of my trading. These are the concepts: structure, market structure. We are going to be looking at market structure, patterns, area of value. Some people, refer to these as support and resistance and all that. These are price area in the charts where markets, play around, find sensitivity. Then that's area of value. Then candlestick formation. These are more of Baby Pips. Don't worry. I will talk about Baby Pips close to the end of the video. Don't worry, I'm going to talk about Baby Pips close to the end of the video. Let's just go straight into this now. I'll talk about Baby Pips. So you guys can just, stay on till the end of the video. It's going to be a quick one, so don't worry. We're not going to waste time. So candlestick formation. These are candlestick patterns, So these are the four things I'm going to be talking about today, because these are the four things I actually look for when I'm entering trades. Now let's go to the charts. First of all, for me, before I analyze, the charts for the week, I tend to look at the DXY. The DXY, this is the dollar index. I'm pretty sure you guys know this dollar index. It actually measures the strength of the dollar against a lot of other currency pairs in the market. So in order to actually, understand the strength or weakness of the dollar, analyzing the DXY plays a high, role in that. So whenever you analyze the DXY and there's a probability or high possibility that the DXY is actually going to gain strength, is going to be bullish for that week, there's a lot of possibility that other pairs are going to sell against the DXY, against the dollar. Yeah, as you can see this massive drop here. I was actually anticipating this. Unfortunately, I didn't trade much today because I'm not, feeling too okay to trade and all that. So if you see this massive drop here, you can see all the other pairs. You can see all the other pairs are actually buying against the dollar. A lot of pairs are actually buying against the dollar. Now let me go to the weekly, because for me, I normally do a top-down analysis. Yeah, top-down analysis. That's what I do. First of all, whenever I actually take a trade, before I actually take a trade, I go to the weekly chart. From the weekly chart, I try to understand what is the market structure at the moment. what is actually the market structure. Is the market trending or is it ranging? And if it's trending, what trend is it? Is it an uptrend or a downtrend? Is it an uptrend or a downtrend? So that is the market structure. As we can see here, we can see this market is actually converging on the higher time frame, on the weekly. You can see, it goes down, creates a higher high, goes down, then creates a low that is lower than the previous lows. Then it goes up again to create a lower high, which is lower than the previous low. Technically, if this was an uptrend, it should create a higher high. An uptrend consists of higher highs and higher lows. Then a downtrend consists of lower lows and lower highs. So since this market is actually not breaking above the previous highs and still not breaking below the previous lows, we can say this market is actually converging, like it's going in a slopey pattern, like converging. So technically, this is more like a wedge pattern. You can call this a wedge pattern or symmetrical triangle pattern. Yeah, you can say this is a wedge pattern or a symmetrical triangle pattern. So overall, I have now seen that this market is actually creating a symmetrical triangle pattern or a wedge pattern. So say, now how can I actually trade along? Like, this is actually the weekly time frame. This is just to understand what the market is actually doing at the moment. So you see, I connected all these highs and all these highs together, and these lows, connected them together with the trend line. Then I go down to the 4 hours time frame to actually understand, because technically, you are more concerned about what the market is doing at the moment. What is the market doing at the moment? That is the main concern, yeah, because you're actually going to be taking trades in the based off of the current market condition, not the previous price reaction. Or this bigger pattern is just to understand the overall market behavior. Let's say probably on the 4 hours time frame, if price comes here and starts, finding some sensitivity, we won't be like, whoa, what's happening? Yeah, because technically from the higher time frame, we've seen that price has been unable to actually create a higher high. It's moving in a symmetrical triangle or a wedge pattern. So with that understanding, you won't be confused about what market is actually doing. And it is very good to actually, analyze the charts every start of the trading week so as to understand what the market is actually doing. You can't use previous, it happened, you can use previous analysis for taking trades on the market, but sometimes when price gets to particular areas and starts reacting, you may be like so confused. I don't understand what market is actually doing. So now let's head back to the chart. So you can see presently on the recent price action, for me, what I saw that price was actually moving in an ascending channel. This is also an uptrend. You can see it's an uptrend. The recent price action, you can see price was moving in an ascending channel. You can see it created a high here, a low, a higher high, a lower high. Now this is a high. This is a high. Yeah. So technically, this is what we are seeing on the daily time frame, and we can see that price is actually moving in an ascending type of nature. Yeah. So technically, on this is more like sometimes when you actually see this pattern in a downtrend, within a downtrend, this is more like a continuation of a downtrend. And when you see this chart pattern in an uptrend, at the end of every uptrend, it tends to be a reversal pattern. So I'm sorry if I'm going too fast and all that. I just have to like run through everything and all that. Yeah, so at the end, you guys can ask questions and all that. So let's get back. So technically, I did see that this price was actually moving in an ascending channel type of nature. I connected these highs to these highs here, and these lows to these lows here. Now these real lines you can see here, these are actually areas of value. Yeah, let me explain these real lines you can see here. These are areas of value. What these areas of value actually mean is that these are more like support and resistance level, as you can see, support, resistance, and all that. Which means why I marked this area up is that price has actually reacted to this area. So which means if price somehow, anyhow, anyway, gets back to these areas here, these price levels, these areas of value, there is going to be a reaction in price. Either we are going to be seeing a reversal or an impulse break above the level, a correction, to say let's retest the level, or a bearish flag formation around that level for a possible continuation of price. So that is why I actually marked these areas of value. And how do you actually know this area of value? This area of value are where prices struggle. These areas of value are where price actually finds some sensitivity. You can see on these areas here, you can see price was actually ranging. It was unable to break above this area. So technically, which means there is an interest. This is an interesting level for sellers and buyers. This is an interesting level, which means whenever price actually goes back to that level, there's going to be a reaction. Yeah. So there's going to be interest, like sellers or buyers' interest at that particular areas here. Same also you can see here. Same also you can see here. So overall, we've noticed that the chart pattern here, or the price reaction here, is creating a wedge pattern, and the recent candlestick formation or price movement is an ascending channel on the daily time frame. Now let's go to the 4 hours. Yeah. Now let's go to the 4 hours, and on the 4 hours here, as you guys can see, on the 4 hours here, so we'll like zoom in a little bit. The 4 hours here, what we can see is, you can see here, this was the second touch of the trend line. This was the second touch of the ascending channel. This was the second touch here. And as you can see, price was unable to break above it. You can see this was the second touch. Horizontally, you can see price was unable to break above it. So it was as if price is actually in a range at this point. You can see price was in some kind of a range at this point. Ranging markets are markets whereby price doesn't make a series of higher highs or higher lows. Price just like goes within a range, zigzag within a particular price range without breaking above it nor below it. So that's what is referred to as a range. For those of you actually, I believe a lot of you already know what a range is, but just for newbies and all that. So we can see here, so this was what happened here. So I actually did an analysis here. You can see I was actually previously anticipating that when price actually gets here, it was actually going to go down. It's going to sell. I was anticipating a sell from this area. Now, this is what happened. Yeah. Now, let me go to the 1 hour and show you guys. This market, if you actually understand how to interpret these candlestick formations, yeah, you have a higher percentage win rate. Yeah, your win rate tends to be higher than your losing rate. So this is what happened. So I was anticipating a third touch here at this line here, then for a possible continuation sell all the way to the area of value. These are support level down here. Sorry guys, I think you are the host. Sorry guys, I think it's the network actually. I think I'm having bad internet connection here. The internet connection here is very ugly. The internet connection here is very ugly, guys. Sorry for that breaking. At this moment I cannot see that. Okay. Sorry for that, guys. The internet connection here is very ugly. So I'm like taking a lot of time to actually explain these whatever is going on here, but on the other pairs, I'm actually going to run through them. Yeah. So this was what was actually happening. Yeah, I was anticipating a third touch on this trend line for a possible continuation, sell to the support level here. But then this was what happened. Price started creating a bullish flag. You can see here, price started creating some sort of a bullish flag. So that was when I actually had to take out my previous analysis. I was like, okay, since price is creating a bullish flag, there is a possibility and tendency for price to actually come back up until this zone right here. Because technically, if price was to just reverse from this level, it would have been creating a reversal pattern which would have been a bearish flag formation, like probably something like this for price to actually go down. But I saw that price was actually starting to create a bullish formation, and I had to take out my previous analysis and wait for price at this level. Now, my forecast for this chart is I'm going to be looking at these areas of value and see how price reacts to this area. Now, if we come back here and start seeing a reversal pattern which will be in form of a flag like this, probably a continuation, a reversal pattern which will be like this, then I'm actually going to be, waiting for possible sells to the buys, to the upside. If we see a reversal pattern somewhat like this, then we are going to be seeing a possible buys to the upside again. But sorry about that, guys. But if we see a kind of a break below this area of value, this support level, and a possible, bearish flag formation, or you can call it retest, then we are going to be seeing a possible continuation sells all the way to the down of the overall channel. Yeah. Or if when we actually reverse and get up onto this place and we break above impulsively or get a correction in form of a bullish flag, then we may be seeing continuation buys. So these markets, you have to be actually open. You have to be open to possibilities. You have to understand, okay, if the market does this, then this is what I'm actually expecting to trade. If you actually are focused on just one bias alone, then you'll be confused, because when the market starts creating something else, you won't know how to approach it. But now I already have all my trading plans on the DXY marked out, which means if price does this, then I'm going to do this. If price does this, then I'm going to do this. Technically, definitely price must do any of these things. It must do any of these things, yeah? Worse will be the case, probably we might get an impulse just straight to the downside without getting a correction to retest this broken support level. That would be the worst case scenario. But technically, from a technical point of view, price will do any of these three things. Either it breaks below, creates a correction to retest this particular structure before going down, or it creates a reversal pattern here for a possibility to buy right straight to the resistance area, or it impulsively breaks above the resistance, gives us a nice a bullish flag continuation pattern for a potential buying opportunity. So technically, this is what I'm actually anticipating on DXY. But for now, I'm still anticipating a possible more sales to the downside. But technically, anything is possible. Price can just decide to reverse from here. Price might decide to reverse from here. But for me, before I actually take any trade now, I'm actually waiting for price reaction at this area. Like Mr. Prince will always say, this is a no man's land. It's actually a no man's land. At the moment, price is at a no man's land. If you were to actually take this trade sold from this top here, and how would you have actually been able to sell from the top there? You can see some candlesticks reaction at this area. You can see how price was starting to create lower lows, and lower highs. You can see how price was actually starting to create lower highs. And before you actually sold up, you can see this doji candlestick which indicates an indecision in the market, and you can see the following candlestick, they were bearish, which means the market sentiment has already changed. I won't go into much candlestick analysis and all that, so that would take more time. So like I said, these are the three scenarios I'm actually going to be waiting for the DXY to create, and whatever these DXY actually creates will like create an overall market conditions for other USD related pairs. Like you can see here, this massive sell. You can see how Euro USD is actually buying. You can see it's up like 138 pips. Actually up 152%. And let me go straight to the gold. Let me go straight. I'm going to gold analyze gold and one other pair before I actually turn on to you guys for questions, and if you have your own pairs you'd like us to analyze. So on the weekly time frame here, we can see how price has actually created a double top. You can see how there was a massive sell-off here from gold. So you can see when price actually came back here, the same thing happened. There was a massive sell-off. There was also a massive sell-off. I was already actually anticipating this because back then my analysis was actually like this before this happened. Was my analysis before this happened. This was my analysis before this happened because I saw that price was actually approaching this area of value in a reversal pattern. Technically, this is a reversal pattern. Yeah, this is a reversal pattern. Reversal pattern. So I was like anticipating a possible third touch before price actually sells it. Unfortunately, that did not. Please. Oh, you have a baby crying there. You should mute yourself, please.
Carry your bread. Wait for your mommy. Carry your bread and wait for her.
Please mute yourself. Please mute yourself.
Wait for her. She's coming. She go to buy pure water.
Mute. Okay, sorry. I had to mute you because your baby was actually, disturbing. So technically, these are areas of value. So why I marked up these areas is because whenever price gets to this level, there tends to be a price reaction. Yeah, price tends to either reverse or breaks above and continues. Yeah, so you can see. So for now, I'm actually anticipating a possible sell on gold. I'm bearish on gold for the moment. At the moment, I'm bearish on gold. So you can see I marked up this level because this was an area of value here. Because I was like, okay, if price comes back here, there are two things are going to happen. Yeah, either we're going to get a break above possible correction for buys, or we're actually going to sell off whenever price gets here. That was the two things I was actually, anticipating. Unfortunately, price did break above and created a double top, which you can see here. This was the first touch. This was the first leg of the double top. Then this was the second leg of the touch here. And for me, whenever I get into trades, I always look out for patterns, areas of value. So now, if we go down to the 4 hours, we will see that price was actually still, even if after price broke, it validated this reversal pattern, it was actually creating a smaller version of the reversal pattern. Yeah, you can see here. This means this was when I knew that this bearish sentiment is actually still in the market, but it is just looking for a high area of value where there are sellers' interest, before it actually sells off. Okay, I think we have 10 minutes left for this right now. So because I'm not using the upgraded version of Zoom, as you can see. So, but what I was actually anticipating, this is a bearish impulse move. But about this impulse move, yeah, whenever there is an impulse, yeah, there tends to be a correction which is a pullback before an impulse. The market does not move impulsively forever. It impulses and corrects. Impulse, correction. And for us traders, the best time to enter into a trade is actually at the end of every correction. Like you can see here, this was a nice bearish flag pattern. Unfortunately, I did miss my sell this morning. Like I said, I was not active on the charts this morning. I marked this up. I was like, okay, this is an impulse move and price is actually correcting in form of a bearish flag pattern. Yeah. So I was then waiting since I missed the third touch at this top here. I was waiting for a break below this pattern and a possible retest to take a sell. And if you go down to the 1 hour, you will see that I actually had my sell entry criteria and everything, but unfortunately I was not active as at that time to take the sell. Now, what am I waiting for? To get in on another sell. We are actually going to be seeing something like this, an impulse and another correction. Like I said earlier, the market cannot impulse forever. It has to correct before continuations. Yeah. So this is what I'm actually waiting for, to get in on another sell on gold for the now. If this overall sentiment, bearish sentiment continues, this is what I'm actually waiting for on gold. If you go down to the 1 hour, you see the entry which I missed. You can see here. You can see how price actually broke below this pattern, then retested, giving a nice bearish engulfing candlestick confirmation. So if you can see, ever since I've actually been explaining the charts based off of these 4 patterns here. These 4 patterns: structure, pattern, area of value, and candlestick formation. Okay, and candlestick formation here. So as you can see here, the overall market structure, is actually trending for the moment. You can see this is a low, a higher, a high, a lower low, a low, and a higher low. Then we're expecting a lower low here before we get another lower high here for a possible continuation sell to the downside. Now I'm going to open the room for questions because we only have 7 minutes left. Sorry, I can't go into much chart analysis and all that. But let me just show you guys the trades we are currently on right now. I'm currently on sales on USD AUD card. The reason why I entered the sell I actually posted on the group, so I'm not going to go into it. I'm just going to show you guys how it's actually going right now. Right now, it's just consolidating around our entry area and Euro GBP. I took a buy. This buy actually took forever before it actually went. So I'm still on the buy. So don't look at the TP that probably it has hit TP, because I knew this was a reversal pattern. This was an overall reversal pattern. So you can see how price is actually reversing. We may even see the price can break above this downtrend line. We may see price going all the way to this highs here. We may see price going all the way to the 87,284 area here. So I'm still on the buys now. So let me open the room for questions. I think we only have 6+ minutes now. So you guys can unmute yourself and ask questions. If you have any question, let's just take questions and see how that goes. We're still going to be hosting more Zoom classes. Probably, hopefully soon I'll upgrade so that we can, spend more time on this Zoom. So guys, unmute yourself and ask your questions. If there's no questions, I guess this will be all, but if there are questions, unmute yourself and ask now. I'm available for questions. If there are none, I'm available for questions, guys. I hope you guys can hear me clearly. Are you guys still active? Okay. Ask your question. Robinson, please unmute yourself and ask your question. Please, sir, please. Okay. Please ask your question.
I want to ask a question about this. The problem I have with this spotting this zone.
Yes.
Is the line, how to draw the trend line, but how to spot the zone is very important, but to draw the trend line is a problem because I'm using phone.
Okay, it's not difficult actually analyzing on your phone. Actually, these zones are pretty easy. In order to spot them, you have to go to the higher time frame. Yeah, if you go to the higher time frame, you see areas, or you can, if you are not that probably good at spotting zones yet, you can use the line chart. So these zones are area of reversal. Yeah, you can see these zones are area of reversal. You can see this was a reversal area. You put a line there. Yeah. Whenever you see these reversal areas, but you have to understand they're actually minor zones and major zones. Minor zones are actually those zones you spot out on the smaller time frame. So sometimes price will just break above and below those zones without even respecting them. But these zones you get on the higher time frame are actually the major zones. Whenever price gets there, there's like 80-90% chances that price will actually react to those areas and level. So in order to spot zone, you just have to be putting your lines at these areas of reversal. You can see here this was a reversal area. So you can use the line chart. To identify your zones. If you can't use that if you can't identify them on the candlestick charts, yet you can use the line charts and identify your zones. So you'll be able to identify them more easier with the line charts. Yeah, I hope I did answer your question a little bit. I hope I did answer that a little bit. Yeah.
Yes.
Okay. I think somebody just asked there, what about the baby pips? Okay, I'm going to do let's see. So baby pips is actually a website where you can learn forex trading for free. Baby pips. Let's see if we can actually. Baby Pips is a website where you can actually learn this forex trading for free. Where you can learn this how to trade FX for free. So they have a free trading course there where you can actually sign up. Once you get on their website, so this is the website. All you need to do is join. You can join their website probably if you're new. Then if you're already a registered member, you can sign in. I'm not going to be able to sign in now because there's little to no time to do that. Then after signing in and logging into your account, you go to the education here. You see an education tab on the option on your menu. You go to the education here. As you can see here, you see how to trade Forex. The School of Pipsology is the most popular Forex trading course on planet, blah, 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 and all that. So what you need to do is you click on start course. Yeah. Once you start the course, once you click on start the course, the course is actually breaking down from technical. So it's broken down to like, lessons and modules. You go from technicals, introduction to Forex, technicals, fundamentals, and everything. This is where I actually learned a lot about these chart patterns and fundamental analysis as well. Here you get to learn sentimental analysis as also. So this is actually how you assess this Baby Pips. I'm still going to be talking a little bit about. So if you actually have problems signing up or accessing the education, you can actually write me up on the WhatsApp group. Yeah. Can write me up on the WhatsApp group. So basically that's it. This Baby Pips contains a lot of content. It actually is superb. It's wonderful. If you go through this and you actually practice what's actually in here, there is a lot of possibility that you actually become consistently profitable with time. So yes, guys, that will actually be all. That will actually be all for now. Until the next time where we meet again, guys, it's actually less than a few seconds and Zoom is actually going to cut us out. So guys, stay blessed, stay safe, and always practice proper risk management. See you guys next time. One love.